Hello friends, welcome back to this channel. Uh, Today was not a very good day for us. Like on Friday, we I think closed on somewhere around 18,000 of actual profits, and this is Monday today. After 3 days of uh, you know time lapse, in which two were non-trading days, and the market opened today. It kind of increased approximately 1%, and most of our positions were in selling call options. It's not a very good day for us. Still, we did not go into losses. We are still in 7,000 profits as of now. But in this video, we're going to talk about uh, the things which did not go our way, specifically this loss that I've put. Right? So let's dive deep into what went wrong, why I made this trade, what could have been better, and so on. Right? So if you let's go through the current positions for all the trades that I've been sharing for the last week. Nifty, I have sold a 24,800 call option and purchased a 25,000 call option as a hedge. So far, I think I'm in minor losses in both of these, but we're still hopeful that the market would stay below 24,800 by the time of expiry, which is 21st of August. In Bank Nifty, we're in slight profits. We've sold a 57,000 call option for the month end expiry. It's still some time, we're still far away in our position, so we are a little safe here, so we do not have to do anything in this one. Okay, coming to Dabur, and this is the stock in which we encountered 20,000 loss. So what happened? Let's see to the chart and let's understand the psychology. What was there and why I took a trade that I possibly could have avoided. Right. So this is where the day started. The markets fell down a little, especially Dabur. It opened at around 507, right, and then it fell down up to a price point of 500, and we had a position wherein we had sold 505 put option, right? Remember, we have sold the position, so we were expecting the market to stay above the 505 point, but it did not. It went down, and we're like not uh, the month in expiry is still a bit far away. So this now actually becomes a very tricky position to be in, right? So if the markets fell further down, it would have been like huge losses for us, and we would not have been able to recover from that, right? And going by the previous mistake that I did once with the eternal stock, in like I've talked about that in one of my videos. Do go to that video if you have not, like you would really understand a very valuable lesson in risk cover. So to avoid any further risk, I exited my position somewhere here. All right, so I did not want to incur any further losses. The market went further down, and it kind of looked as if I made a right choice at this moment, because I could have get like gotten more losses had I stayed here as an open position and I've watched the market, go further down. I would have seen my profits, or like seen my losses go high, very high, and I might have exited the position maybe at this point of time, which would have hurt me more. So at this point of time, when I saw my positions, I thought that my trade, my exit was a good exit, right? But what happened next was that market rebounded from the 500 point, and then it kind of closed at 510, right? So the option that I sold it at around 8.10. It fell down to 5.5, right? Almost 2.5 points, and I had four lots, which was like 5,000 quantity. So 5,000 into two and a half, almost 12,500 I could have saved in these losses, right? To hedge the position on Friday, I think I also talked about that I took or purchased two lots of 495 PE. So because of this, when I sold this position, I also squared off my this put option buy trade, and which was trading at 2.7, like which gave me a 3,000 risk cover. So eventually, my loss came up to 20,000, and this 540 position is still giving me profits. So I think we're good at that. Right. So the major learnings that we would see from this trade specifically is, let's say, the daily chart for Dabur, and you would see that probably 500 was a point where the support was present. We've seen support at this point at approximately November 14. It went like touched 500 point, went up. Then again on two occasions on like December 16th and then December 19th. And then it stayed above this point for a few times, went up, came back, breached the point, breached the support level, then acted as a little bit of resistance, maybe at a little higher level, but then the market fell down, rose up. Even at this point, we can see that somewhere the markets rose above this point around the 505 mark. Right? So this was a zone where we can see that there is a clear support or resistance available, and when the markets fell down to 500 position, uh, we could have hold on to a position to see what and how the market reacts. Right? It could have been the case that markets fell drastically from here, and then it would have been very difficult for it to go back up or recover. Or it could have been the case, which happened right in here, that the markets rose above this point and it acted as a support point for us. Right? But we did not have a very strong risk cover in this case. We ideally should have, right? Because when we are trading with such close strike prices, we should have a like a good risk cover. So that was one of my mistake. I think I should not have sold 505 put option at the first place, simply because the market was on a downtrend. I should have avoided any selling put options trades, at least for some time. The second mistake would be that the option that I've sold was a very close one from the current market price. So if you see, one of my positions is like very too far away, right? But the other position was actually, it went very close to the current market price. So I should have either exited the position pretty soon, or I should have bought a proper risk cover for myself, which means I could have created a spread on the put side. Right? I don't know if you see, it considers my losses and says that if the market stays below, I would overall incur a loss of 4,800, including this loss of 20,000. So probably this call option can give me a few more profits. For example, 5,000 lots into 1.35, somewhere around 7,000. Okay, and these are the same position that I had on Friday. No changes in these positions. Probably I have more on profits with JSW Steel. And if I just show you my profits without my Dabur position that I sold off, and approximately 27,000. So this is the number that we're going to start with tomorrow, right? Because this booked losses will be adjusted, and then from tomorrow we're going to start with 27,000 as a notional profit, and then let's see how the week goes ahead for us. All right. I hope you were able to understand why I took the trade and what could have been done to improve our risk cover and avoid such big losses. And I hope you would not make the same mistakes that I did. And yep, that's it. Enjoy options trading, and I hope I was able to provide you some value. Thank you so much for your time. Take care. Bye bye.